Hi there, this is Rob, and this is the 2-minute overnight overview for Friday. We had another somewhat close call yesterday afternoon, which led me to stand aside once again. Let's first take a look at the odds sheet, and then I'll discuss some of the other evidence I was considering and why I ultimately decided to sit this one out. Looking at the odds sheet, diamonds were the only thing with numbers strong enough to generate any kind of possible signal. When it's highlighted in orange, that means the percent profitable is below 45% and the profit factor is below 0.91. As you can see, some of the other ETFs just missed as well. Also, ES showed some bearish inclinations. Price action for ES suggested a downside edge. Internals also showed a small downside tendency, but seasonality bucked the other two and showed fairly bullish numbers. So the net didn't quite get there. There were also some studies I took under consideration. The one from the 2-minute overview yesterday showed positive Fed day closes often lead to gaps down the next day. Additionally, the Edge Finder identified two studies related to ES breaking above its upper Bollinger Band that both suggested inclinations to gap down. I also looked at another study in the trading room related to recent POMO flow data that suggested a moderate downside edge as well. So we had a number of overnight bearish studies. Price action suggesting a gap down. Internals as well. A reasonable case could have been made to take a short position. I did not feel the case was strong enough. For one, no other future ETFs on average or a weighted average basis confirmed the bearish number suggested by diamonds. As I discussed in the trading room, I used the 45% and 0.91 as minimum requirements. In most cases where I'd take a short position, I would expect numbers to be even lower. So to go short would have been quite a stretch. And since seasonality is bucking against me, I'd be looking at the lower target amount. Essentially, I'd be trying to make only 4.25 points while risking 9. That's okay if I have strong odds in my favor, but for a borderline trade, I want a better risk-adjusted payoff. I went over all this in the trading room on Thursday and declared that I was not going to attempt an overnight trade last night. So let's see how the night played out. As it turns out, I was fortunate to be able to avoid a loser. The market traded above the close for most of the night, and at the open there was a gap up of about 5 points. One quick comment on the Fed statement yesterday. What stood out to me is that as a trader, is that interest rates are likely to remain zero for at least 3 more years. That means overnight growth in our accounts will need to be manufactured by trading profits. No interest is going to be earned. Of course, those of us that take a quantitative overnight approach will be able to rest easy knowing the odds are in our favor. Have a great weekend.